Welcome back to Curio Inc. In part 1, we explored how humans first invented money. If you haven't watched it yet, I'll leave the link in the description. Today, in part 2, we're going deeper. And if you're enjoying this series, make sure to hit that subscribe button. Now, here's where it gets really wild. And I need you to pay close attention. In medieval Europe, goldsmiths kept gold safe from merchants. In return, they issued receipts. People started trading those receipts directly. Then the goldsmiths noticed something. People never came to collect all their gold at once. There was always gold just sitting there, doing nothing. So they started lending out receipts for gold that didn't actually exist. This is how banking was born, creating money that doesn't exist and lending it out for profit. Modern banks still do this today. It's called fractional reserve banking. Your bank keeps only 10% of your deposit and lends out the other 90% as if it were real money. The money in your account technically doesn't fully exist until the bank decides to create it. Crazy, right? But don't touch that video yet because the story gets even stranger. For centuries, paper money was backed by gold. $1 equals a fixed amount of gold. This was called the gold standard. It created discipline. Governments couldn't print more money than they had gold to back it. But then came World War I, World War II, and wars are expensive. Countries needed to fund massive armies, but their gold was running out, so they made a choice. They abandoned the gold standard and printed money anyway. The final blow came in 1971. President Richard Nixon announced that the US dollar would no longer be convertible to gold. The world shifted to fiat money, money backed by nothing but the government's word, by trust, by belief. We went from shells and gold to paper backed by faith alone. And here's the terrifying question that economists still debate. What happens when that faith breaks? Fast forward to 1950. A banker named Frank McNamara forgot his wallet at a restaurant. He was embarrassed, but instead of staying embarrassed, he invented the credit card. And just like that, money became invisible, a number in a computer, electrons moving at the speed of light. By the 1990s, internet banking arrived. By 2007, mobile payments. By 2009, something even more radical appeared. A mysterious person, or group, using the name Satoshi Nakamoto published a document called a white paper. It described a new kind of money, one controlled by no government, no bank, no person, controlled only by mathematics. Bitcoin asked the ultimate question: what if money didn't need trust? What if it was governed by code instead of humans? Whether Bitcoin succeeds or fails, it forced the world to ask, what is money, really? And why do we get to decide who controls it? So after 10,000 years of shells, coins, paper, and digital code, what is money? It's not gold, it's not paper, it's not a number on a server. It's the idea that says, I trust you enough to give you something real in exchange for a symbol. Every time you pay for coffee with your phone, you're participating in a 10,000-year-old agreement. So the next time someone hands you a banknote, look at it differently. That little piece of paper survived thousands of years of human history. It survived wars, empires, revolutions, and it only has value because right now, you believe it does. If this video made you see the world differently, like it, share it, and subscribe for more stories that change how you think. And I'll see you in the next one.